Market certainly reacted negatively to Apple's surprise revenue warning. And that, I think, leads to some real lessons that we have to take away from the market going forward. You've heard the phrase, live by the sword, die by the sword, but I guess in this case, it's live by the fang, die by the fang. One of the risks that I think I'd pointed out over the last year was the narrowing leadership in the markets, and how, while it's wonderful if you were one of the people invested in Facebook or Apple or Amazon or Netflix or Alphabet, Google, those are the fangs, you were really enjoying a lot of outperformance. The problem that you have when you see such narrow leadership in a market is there's no place to hide when that leadership falters. And Facebook, I don't have enough time to get into all its troubles, but Facebook certainly has lost a large share of its luster. And now Apple, showing some real weakness here. A lot of people had started to say, oh, you'll never see Apple below 150 again. And, there it was with a 140 handle. When you start to see the market leaders falter, when they get that concentrated leadership in the market, they get outsized weights in the index. And guess what? When they fall, they have no choice but to drag the index lower with them. Think about, let's contrast it, let's say, to current GE. GE fell 50% over the past year, not without troubles of its own, but its market cap had gotten to the point where it was so small that it had really no influence on indices anymore. Before it got kicked out of the Dow, it had such a low price point, because it's a price-weighted index, that it effectively had almost no weight in the Dow, even though it was only 30 stocks. The difference being, when something like Apple, either with its $165 number or $145, whatever the price may be, with a number that high, it's going to have a large weight in a price-weighted index such as the Dow. And with an enormous market cap, remember we were talking about $1 trillion not that long ago, with an enormous market cap, it's going to be a leader in all cap-weighted indices that it's a part of. So when that falls, it falls hard. When the giants fall, they fall hard. And that becomes the problem for the markets. And you start to have to think about what is the valuation of some of these, and at what point do they become value stocks that would cause them to sort of arrest their decline. When you're priced to perfection, there's no real room for disappointment. I think that was illustrated on Wednesday by Tesla falling. And when people looked at the numbers and said, oh, they're cutting their prices by a couple $1,000s and they missed their delivery targets by a fairly small amount, the stock fell dramatically. Why? Because Tesla, there's no room for disappointment. It's priced so high. It's priced greater than essentially the rest of the domestic auto industry, and then some. Ford can miss its targets by a fairly wide margin, and it's not going to get hit as hard as Tesla because there's just not as much perfection priced into it. So that is the downside to chasing market leaders. Going forward, Amazon business seems to be cruising along, but Amazon is priced at an enormous price earnings multiple. Netflix, same issues here. You've got enormous pricing. They do have cash flow. I'm going to say people worried about their cash flow because they spend an enormous amount on programming. And also, quite frankly, Netflix is one of the few companies that competes head-to-head with Amazon in one of its sectors. Amazon has a very good video delivery system, as you should know, and yet they remain priced at a premium level. So there are worries out there, and what can happen is when you've got these stocks with big market leadership, if they fall and there's no natural place for them to land, that's going to be very difficult for the markets to overcome. It takes a lot of other stocks going up to offset the weight of one of these big stocks if they get into trouble. So the lesson to take away is, if you feel that there's underperformance coming from the big cap market leaders, that's when you want to be moving away and diversifying a bit, either into sectors or indices that have less of a weight from these market leaders, or by sort of shifting your individual stock focus maybe away from some of them and towards value as opposed to growth. Markets have really it's a tough sentence, has really valued growth over value, but perhaps it's time to think about valuing value over growth.